Oh, hey guys, I didn't see you there. Well, you guys may not know this, but one of the things I enjoy doing on a bad day is trimming my bonsai tree. It's been a pretty bad week. There's actually not much left of it. It's pretty much dead. So, what happened this week? Well, I lost about $15,000 over the course of 4 days. It was my worst slump in 2017. But the good news is I've bounced back. I bounced back yesterday and I bounced back today, and I'm on the way back up to $100,000. So today is our episode 5 of Behind the Trades, and we're going to talk about how I recovered from one of the worst weeks of the year. All right, guys, so we're going to jump right in. You guys can see the slides for those of you watching on screen share in the chat room. For those of you on Facebook, I'm going to set you up here so you can sort of see. You won't be able to see 100%, but you'll be able to see, I think fairly well what's going on. So let's see. Let me get this set up here. And again, this will be all uploaded to YouTube, so you guys can watch the whole thing a little bit later today or tomorrow if you prefer. All right, let me just adjust my computer here so you guys have a little bit to work with. All right, so I guess that works pretty well. Okay, guys, so looks like we've got a great turnout today, which is awesome. I'm glad so many of you have stuck around for this episode of Behind the Trades. It's been a couple weeks since we did this. In fact, the last episode we did, episode 4 was, I think it was 3 lessons from how I made $60,000 in 1 month. So, what a change from episode 4 to episode 5 here. Episode 5, of course, being how I recovered from my worst week of the year. Now, although I lost $15,000 over the last 4 days during that slump, my worst day of the year, my worst single day is a $15,000 loss. But the thing is, I ended up bouncing back 2 days later with a $22,000 winner. So it didn't even end up being a red week. But this is a red week. And actually, this might be, I'd have to look through, but I'm almost positive this is my first red week of the year. I'm closing the week down $7,200. The cold streak started at the end of last week and then continued into Monday, Tuesday, and Wednesday. All right, so today we're going to talk about an overview of my weekly stats, what I did right, what I did wrong. We're going to talk about the best trade of the week. We're going to talk about the worst trade of the week. And then the main topic today is how I recovered from my worst week of the year. Now, our special reminder, guys, today is St. Patrick's Day. So I'm sure some of you are celebrating, and you may need to watch this a second time when you're a little more sober. But also a reminder that we are hosting our 30% off store-wide sale, which expires tonight. So coupon code LUCKY30 for chat room memberships, and those of you who are interested in our courses, all of that is available now. All right, so the weekly stats. Well, my January 1st starting balance, as you guys all know, is $583.15. I did break $100,000 last week. I got up to $101,000 on day 44, which was last Wednesday, March 8th. But I then started my kind of slump last Friday, and I went red on Friday. I lost about $3,500, and so I opened on Monday morning with $98,003. My total weekly gains this week are actually a loss of $7,200, and so I'm ending the week at $90,737. Obviously, this is a little disappointing. One of the challenges for me is, that this whole challenge has been so public. I had someone, a troll, if you will, ask if my challenge was to take $583 and turn it into $100,000, and then take $100,000 and turn it back into $583. At this point, I'm not 100% sure. I don't think that's the goal, but the problem is there are definitely people that were kind of hating on me for the last 4 days because, I had 4 consecutive losing days. I mean, it's embarrassing. It is embarrassing. On the second day, I was like, all right, whatever. I've had 2 red days this year, back to back before, not a big deal. On the third day, I was like, okay, this is getting a little ridiculous. And on the fourth day, I was like, all right, I think I'm gonna go like out into the woods and just sit by myself for a while. Like this is just really, this is really frustrating. So, that's the challenge. Now, obviously, on the days where I had big green days, and when I hit my $100,000 goal, that's, I guess, the fun part of having this whole challenge be so transparent. That you guys were able to see every single day that led up to, that big moment. So, but then it's just like trading. You have to take the good with the bad. And so part of being really public about this whole thing is that, there will be people that give me a hard time when I have, good days. They think I'm making it look easy or it's not fair, blah, 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 blah. There's also people that are going to have a hard time when I have a bad day. They'll say, I'm stupid. I made stupid mistakes and stuff like that. So I definitely got a good amount of that this week. And I was feeling frustrated, and I think that knowing that there's going to be a number of people watching, my every trade, it adds more pressure because it's like performance. You want to do your very best, and so it's always disappointing when you have a bit of a public kind of setback, and that's, I suppose, what the last 4 days were. So in any case, I'll talk about this more in a moment when I really talk about what I did to turn it around. So just in terms of weekly stats, accuracy this week was 60%, but here's the problem, right? There's two sides to the coin with accuracy. You've got your accuracy, and then you have your profit loss ratio. My profit loss ratio, my average winners were only 5 cents, and my average losers were 10 cents. So if we look at this graph right here, and for those of you watching on Facebook Live, I'll show you. So when you have a 1 to 2 profit loss ratio, you need to be 66% accurate to break even. Now, fortunately, I was able to be, I guess I lost money here. But even in the last 2 days with 60% accuracy, I made money. I made money today, 1,500, and I made 2,000 yesterday. So you can make money with lower accuracy if it just so happens that the one trade you got aggressive on happened to be your winner. But obviously this week with a negative profit loss ratio and with only 60% accuracy, I was below the break-even point. So I came in down $7,200, and last week I made 17,000. So I'm still green. I'm up 15,000 on the month right now, 14,900. So it's still a decent month. But last month I made 60 grand, and that's just not going to happen here in March. March is, my goal for March now is just to get myself back up to 100,000. So that'll be somewhere around 23,000, or I guess 25,000, since I'm about $10,000 off that level. So that may take me the next 2 weeks at $5,000 a week. And that's fine. If I get a really good trade in one day, I could have a big winner, but I just have to kind of take what the market's willing to give me. And, as of recently, certainly this week, it's meant I've had to be a lot more conservative. All right, so that's the big picture of the week. Thank goodness I broke $100,000 before this slump. I mean, I just broke over it. And then the next day I made, I think, $300, and the day after that I lost 3,000. So, at least I got over that level. I hit my goal, and at this point, there's not really a goal in sight. Some people have asked if that's why maybe I haven't been doing as well, because I haven't been focused on a goal. But I think it's really just been the market. So let's look at some of the trades from the week. Well, best trade of the week is actually tops. This was a trade that I took yesterday, and it was really just a very clean pattern, and you can see the move from $1.20 all the way up to $2.40. You have your first pullback here, you have your second pullback here, and yesterday I finished up $2,000, and this was a really great kind of redemption trade. It was easy, smooth, very clean. Now tied for best trade of the week is my trade on PULM that I took today. And so I'm actually going to put up my my video of this trade. So this trade on PULM was super simple. Now, those of you watching on Facebook, you can see the 1 minute chart right here where we had 1, 2, 3, 4, 5, 6, 7 consecutive green candles. And then we had 1, 2, 3 candles of pullback. And so I said, guys, I'm watching this for the first candle to make a new high. And that's my entry. This is a 1 minute pullback. Now, the other thing that this setup had going for it was that it was at the whole dollar of $3. So we knew we were going to get the first 1 minute candle to make a new high, plus we were going to get the break over the whole dollar. And so as we watch this here, I'll put this back down so you guys can see. And again, you'll be able to see this probably better on YouTube for those of you watching on Facebook. But anyways, I'll just play this here. So I've got my order ready here. And I believe I use a hotkey. So I'm long there at 98. This is a very quick trade. I jumped in at 98. It pops up to 312. And you can see here the first 1 minute candle to make a new high. It was such an easy trade, right? In that one trade, already I'm up $777, still holding 938 shares. At this point, we had 1.3 million shares of volume. So you can see, if you look for these types of setups, the first candle to make a new high, it's so predictable that that's where you're going to get the breakout. So that was a quick move, 7,500 shares from $3 up to 312, and I'll finish this trade with right around $900. So nice, easy trade off the high day scanner. And, if I could do that three, 4 times a day, I'd be, a really happy camper. It's just unfortunately this week we haven't seen as much of that really clean follow through. All right, so I'll stop this video for now, and I'll switch over and we'll look at the worst trade of the week. And I should probably edit this video because the place I put the intro is kind of like the worst spot possible. So anyways, I'll fix that. But so jumping back in here, so best trades of the week, tops number 1, and then number 2, we had PULM today. The worst trade of the week, I probably have 5 trades that are all tied for the worst trade of the week. I chose SNGX, which actually I took on Friday, but this was the beginning of the red streak. Or the cold streak. So on this trade, this was really interesting because I got into this setup thinking there was a really big bidder, thinking that this stock had really good support. I think there was a 20,000 share bid right at 280. I jump in, it pops up to like 285, and I'm in with 10,000 shares. Pops up to 285, and suddenly that bid is gone, and now that same share size is up on the ask as a seller. And the stock it just came right back down. Anyone that was in it just bailed out because that seller really held it back. So the issue here, and the issue several times this week, was that I was jumping into trades without waiting for a pullback. Now, I think that in the last, maybe especially in February, I got kind of spoiled because it seemed like anything you bought went the right way. So even if you didn't have the best entry, even if you bought it extended, it continued higher. But, here we are in March, and now it's sort of testing, our habits and making sure that we didn't make or create some bad habits. And that's, I think, what I did in March or February. I created some bad habits, which was just jumping in as stocks were squeezing. So, this month, what's happened on several trades is that I jump into the squeeze, like right at basically when I see a big bid thinking it's going to be a short squeeze, or right at a $0.50 or a whole dollar. And what ends up happening is it pops up a little bit and then it rolls over hard. And this was a really big rejection. I lost $3,500 on it. 10,000 shares, 30 cents, that was it. I was faked out. What I should have done to avoid this loss was wait for a pullback entry. It's really that simple, because once this got a pullback, you would have said, well, it's not clean. It's not a good setup, and I'm just gonna leave it. All right, so this happened on multiple trades this week. This happened on SNGX, it happened on AKAO, it happened on, um, gosh, I mean, it just happened again and again and again. So, and that really is what created this sort of downward spiral for me. I just kept getting into trades and I kept getting stopped out. Now, let's kind of transition here now into the topic of the day. So, recovering from my worst week of the year. Now, for me, I've had red days. I obviously had a day this year where I lost $15,000 in one day, and I bounced right back from it. But this was the first time, I think probably in more than a year, that I've actually had a 4-day losing streak where I lost money on 4 days back to back. So $15,000, for me isn't necessarily a lot of money to lose. What's more frustrating is having 4 red days in a row because, the accuracy is just horrible. So the question is, what was I doing wrong? And how was I able to get out of that rut to recover, about $3,500 of that loss in the last 2 days and to finish the week strong on what are typically my two worst days of the week. In all of February, Thursdays and Fridays were my worst days of the week. And here, this week I was able to really redeem myself, be disciplined, and recover some profit. So for me, there's a couple things, that were really on my mind. And this is what I do anytime I have a loss. I've had, it's been a long time, but I've had months, of course, like probably all traders have, where I lost money. And at the end of that month, I remember one of the last times this happened was a few years ago. I was, kind of looking at my trades at the end of that month, and I was like, where did I go wrong? And so I did something very simple, and this is what I explained to all of you guys the other day, and I'll explain it again now. What I did is I went through my statistics, and I looked at my metrics. I broke down my trades and I asked myself the question, what am I doing right and what am I doing wrong? So I started sorting my trades by winners and by losers. And because of the fact that I'm really meticulous about my record keeping, and I can go back and see, oh, this was a momentum trade, this was a 1 minute setup, this was a 5 minute setup, this was a bull flag, whatever it is, I can now sort that data and I can data mine my own trade history. And that's what I did. I go in and I data mine my history and I start to draw conclusions. Okay, guess what? All of my losers, my biggest losses were chasing a 1 minute setup before waiting on a pullback. Right? So if I know that about myself, I need to make an adjustment. Now, after the first 2 days, I didn't really think a lot about it. I just was like, well, market's not on my side, but I'm not really doing anything differently than I did the previous week where I made 17,000, so I'm not going to change anything in my strategy. The third day, I was kind of like, all right, well, this is interesting, kind of still seeing really bad follow through. Maybe I need to reduce my share size and just kind of like ease back a little bit. And then after the fourth day, I was like, okay, I need to really sit down and look at my metrics. And what I realized I was doing wrong was, well, I mean, if you say it's wrong, I don't know. I mean, it certainly worked well in February. But what I was doing that was leading to the losses was chasing 1 minute setups. So instead of waiting for the pullback, I was just buying. Now I can show you a bunch of examples. I'll show you, or I could show you, I'll bring one up in 1 second, of stocks that last month just completely squeezed and never gave us a 1 minute pullback. And, because of that, I sort of got into this habit of I'm just going to jump in because I don't want to miss the opportunity. Well, that's the fear of missing out, kind of kicking in. It's that fear that you're going to miss the trade, encouraging you to just go ahead and jump in at a price that's really way too high. Now you can get away with that, and that's the tough thing about the market is that sometimes you'll get away with being sloppy or taking too much risk. And that's what encourages you to think, well, sometimes it works, maybe this time it'll work. But when you're in a market that's a little bit more tricky, which is definitely what we saw this week, those bad habits are really going to show their face. And so what I had to do is make the decision that I wasn't going to take trades unless I had a clean pullback. And if that meant that I was going to miss a setup, it would be better to miss a setup than to mismanage risk, especially given my accuracy right now. And so I implemented that on Thursday. I said, okay, guys, here's the deal. Today, I'm going to focus on only buying pullbacks, and I'm going to reduce my share size a little bit. I'm going to scale back, but I'm only going to trade pullbacks. I will trade a pullback on the 1 minute chart, and I'll trade it on the 5 minute chart. I don't care what time frame it's on, but it needs to be a pullback entry, just the way we saw on PULM. Right, that was a perfect pullback entry. We pulled back, and that was a great setup, a very easy way to manage risk. So by doing that, I was able to really get myself out of the rut by by understanding, number one, what was causing the losses, and then number two, what I was doing to generate the few wins that I had. I was able to adjust my strategy a little bit. So the adjustment was, I'm only going to trade pullback setups. I'm not going to chase. Now, I'll just pull up this chart here on NOVN. This is one that we had last month, so I'm going to have to scroll back a little ways. And this is a stock that went from $4 to $8 without pulling back. There's no pullback on this. By the time you got the pullback, the bulk of the move was over, from 4 to 8, back down to 6, and then kind of back up to 750. But this is one of those times where you totally got away with chasing. But with that said, there are still ways to get into some of these strong stocks, at least somewhat safe entry points. So on a stock like this, again, I'm gonna have to scroll back here a little ways. This was on February 15th. So, all right, so here's February 15th. All right, so here we go. On this one, there was no pullback on the 5 minute chart, and that's the reason that I'm saying, even if we only have a pullback on the 1 minute, that's fine. I'll take a 1 minute pullback. I'm not going to restrict myself to only trading on the 5 minute time frame, because if I do that, I'll miss trades like this. But I would only get in a place like this right here. See, this is a 1 minute pullback at 617. That's the place to get in. So I wouldn't get in like as it's squeezing up here. I'm sure someone got in right here at the very top of this squeeze at 559, and then as it pulls back here down to 535, on 10,000 shares, you're suddenly down $2,400. I mean, it happens very quickly. So, this is why you wait for the pullback, and I suppose this would have been an okay pullback too. This would have been okay, and this would have been okay. 1 minute pullback. So I will trade 1 minute and 5 minute pullbacks, but I'm not going to just, buy into the extension. Even though in a very strong market that works, in a market that's a little bit choppier, it doesn't work well at all. Now, you have to be able to kind of taper your risk and adapt your strategy to the environment that you're in. And, this is certainly true with trading, but it's true with a lot of other things as well. And, one of the things we talk about from time to time is my, mild obsession with the television show The Deadliest Catch. And there are days on The Deadliest Catch where, the seas are really choppy and they have to kind of adjust their goals based on the fact that weather conditions are bad, the risk is higher. And then there are other days where, they've got smooth seas and they can, work, a 24-hour, stretch and really, make a lot of progress on their goals, whatever those might be. And that's really the same with trading. There are times when the market's on our side and we can put the pedal to the metal and be aggressive. And there are other times where we have to sort of step back, ease off the throttle, and wait for things to improve. So this week has kind of been that for me. I didn't ease off the throttle as quick as I could have, in part because, again, this technique has been working really well for me so far this year. I've had a couple of red days, and back to back. I've even had a big red day, and I've been able to bounce back quickly, just basically doing the same thing, and then the next time I get into it, it works. But having 4 red days in a row forced me to step back a little bit, slow down, and as we go into next week, my goal is just to kind of continue to steadily, build back up to break over $100,000. So one of the things that you would notice on my equity curve, if you looked at it, is that, I kind of went from $500 all the way up to, 100,000, and I had a couple pullbacks along the way. But now here I pulled back from 100 down to a low of, I think, 87,000. And now I'm making my way off that level, hopefully going to break back through high of day of 101 and make my way towards the 120, 130, 140, 150. But I have to be able to adapt to the market conditions. I can't just throw 10, 15,000 shares at everything that moves when the market is choppy. And it seems like we've kind of been in between parabolic stocks. For whatever reason, yesterday the shippers were back in play with TOPS, TOPS, and GLBS was also pretty active yesterday. You can see on the daily charts. So, that gave us the opportunity to generate some profits yesterday. Today we had PULM. So we're fortunate to have one or two, but I'd really like to get another stock that goes from, $2 to $8 or $10, and it just gets really explosive, because that's what usually starts the next round of momentum, and it kind of, those types of stocks bring out that fear of missing out that traders get, that encourages them to buy them higher and higher and higher. And that's what creates these bigger and more dramatic squeezes. It's really all about collective trading mentality and how the emotions of fear and greed impact traders and impact the decisions they make. So, yes, the last week or so has been a little bit of a setback for me, and I was on the wrong side of one too many trades, but I've made some adjustments. I'm tapering my risk back a little bit until I start to see cleaner action, and I think that's the way to do it. Now, the interesting thing is that really in the last month, I've been trading four-figure days. I mean, my winners are between $2,000 and $8,000 days. My losing days are between 1,000 and 4,000, maybe 5,000 at the most. So I've been trading with big size, and that means either big green days or big red days. The last 2 days, today I'm up $1,500, and to me this honestly feels like a slow day. I've kind of gotten spoiled. I've gotten into the habit that a green day should be $5,000 or $6,000, which is obviously a ridiculous amount of money. But the problem is that it's kind of changed the way I look at some of these trades, because I look at them and I think, well, there's really, what's the point in taking a trade to only make $400 or $500? Like, I don't see the point. I'm looking for opportunities to make $2,000, $3,000, or really $5,000 or $6,000 on a trade. And if I get two of them in one day, I'll have a $12,000 day. If I have four of them in one day, I'll have a $22,000 day like I had in February. That's kind of what I'm looking for. So, to have a couple trades today, where I made, $200, $275 on ARGX, 273 on DFFN. I mean, that's basically, it's like a break-even trade. It's like nothing. But at the same time, I shouldn't maybe think that way, because $1,500 a day certainly does add up over the course of weeks and months. I'm not going to have a $60,000 week or $60,000 month with $1,500 days, but I can still have easily a $20,000 to $30,000 month, which just a year ago would have been one of my best months ever. So, it's just kind of interesting how, your perception can change. And I don't want to lose touch with the reality that $1,500 a day is still very good. It's still respectable. So, that's kind of where we're at right now. The big wins, the big losses, all a result of trading with big size. The big size is the result of increased confidence, which I've gained over the last, over the last year probably, and certainly culminating with that $100,000 challenge from $583 up to $100,000. So next week I'm going to be hosting a webinar where I talk really just specifically about the $100,000 challenge. But for right now, I just really wanted to talk about this kind of slump that I've been in for the past few days, because I think it's really good for you guys to learn how I bounce back from it, how I get back on the horse. This is something every trader is going to go through at one point or another. Beginner traders certainly have more red days and slumps than more experienced traders. So, this is part of doing this challenge in a very public way, that you guys see the wins and we celebrate them, we talk about what works, but you also see the losses and you understand what I did wrong. And I think the things that I did wrong this week, number one, was being a little too aggressive maybe forcing trades, taking position sizes that were a little too big and not stopping out quickly enough. The problem for me, of course, is that when I get into something with 10,000 or 20,000 shares, you know, it's not always easy to just get right out. You know, you have to piece in and piece out. And so by the time you're getting out, even if you want to get out break even, you know you're probably going to lose 10 cents and it's going to be a $2,000 loss. So you really don't want to cut that loss until you know it's not going to work. You definitely don't want to stop out and a minute later it goes right back up. So I think interestingly, some of the trades I took this week would have been winners with 2,000 or 3,000 shares, but were not winners with 10,000 or 15,000. So, you know, right now is the time to scale back until we see maybe that next really strong momentum name, and just, you know, play it smart. All right, so I'm glad that I'm finishing the week on you know, a green day. The last 2 days, it does feel like a little bit of redemption, even though I'm only you know, I don't know, 10% of the way out of that the rut or whatever it is. But it's nice to finish green, and it kind of gets me you know, recharged and refocused for going into next week. All right, so let's see. I'll take this off. Let me get back in here. All right. Okay, guys, so that's it for today. I hope you've enjoyed this episode 5 of Behind the Trades. And again, if you guys have any questions or comments, I'll post this on YouTube, and the podcast will go on the iTunes podcast store, whatever it is. It's free, but whatever it's called. And you guys can ask questions and stuff there. So anyways, that's it for today, and I'll see you all first thing tomorrow morning, or Monday morning. All right. Thanks, guys. Enjoy the weekend.
Let's be honest. If you made it this far, you must have really enjoyed that video. So what's stopping you? Subscribe right here and get email alerts anytime I upload new content. Until then, happy surfing!